Bitcoin has emerged as a significant player in the world of finance. With proponents like ARK Invest CEO Cathie Wood, its role in the monetary landscape is put front and center in today's interview, as she discusses her predictions for Bitcoin and where the price is headed next. Cathie Wood emphasizes Bitcoin's price rule, thus making it more viable as a means of exchange, not just a store of value. This price rule also offers the stability needed for Bitcoin to fulfill its role in the larger crypto ecosystem, as long-term holders continue to accumulate BTC more now than we've ever seen. As institutional interest in the asset class grows, this rising interest could lead to increased demand surges and dramatic price fluctuations, potentially impacting the stability of the market. To counter such scenarios, Wood raises the question of whether Bitcoin holders need to adopt a long-term perspective, or if private actors could intervene to regulate the quantity of crypto to maintain price stability in the next coming months, leading up to the halving in March of next year. Let's get into the latest interview with Cathie Wood and Art Laffer as they discuss the future of Bitcoin, investing, and the potential impact of cryptocurrencies on the global monetary system. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Clearly, Bitcoin is playing one of the three major roles of money: store of value with a quantity rule, right? But we're in a period of great experimentation, which Hayek said we needed to find the best monetary system. And I'm wondering, I know what art means, and I agree with this idea of a price rule and, contracts based on a price rule. Do we think that maybe in this grand new experiment that there might be a fork of Bitcoin to enable a price rule? I've been toying with this idea and trying to figure out the answer. It's a price rule based on a basket of something. So in this experimental world that we're in, and I think Hayek would be thrilled to be studying this right now, I am wondering if, in order to serve as the means of exchange, as opposed to just the store of value, how would we accomplish that? Would it be a fork? It's hard for me to envision this, a fork. So basically, these are software programs, and if you want to go in a different direction, you can. Now, Bitcoin is Bitcoin, and it's a powerful ecosystem, and we don't think anything's going to derail that. But if someone wanted to develop an ecosystem related to Bitcoin with a price rule, it's the core developers who are, they will never, from what I can see, what you can see probably, what we all think is that the core developers would never modify anything in terms of the mathematical metering to get to 21 million units. The problem with that is, what if the demand for it is much more than 21 million units as the economy evolves? There's no adjustment mechanism to meet increased demand, right? What we're beginning to see is, as long-term holders increase, in other words, they're called hodlers, hold on for dear life, right? As those increase, another phenomenon is evolving here, where institutions are developing an interest in this new asset class. And, their incremental demand as the long-term holder base increases could force the price up parabolically, which would destabilize the ecosystem. We have this institutional interest brewing in Bitcoin. It's mathematically metered to go up at a measured pace until we hit 21 million units. But let's just say right now, because of the institutions expressing interest in this new asset class, the marginal demand goes up and drives the price up dramatically to $1 million. Bitcoin's at around $30,000 right now, to $1 million. Let's just say that happened in the world that we've been describing here. Do we need to get through that first and, stabilize the ecosystem as more and more become long-term holders? Or can we get to the world that you're describing, Art, with these other private actors? Well, what happened was during the regional bank crisis, Bitcoin, as regional banks were imploding the stocks, Bitcoin went from 19,000 to 30,000, and it's 30,000 today. Now, part of the reason it's gone back to 30,000 after a little bit of a jog here is speculation about a Bitcoin ETF, and we can't say anything about that. In my experience, when investors focus obsessively on a number or two, and in the case it is employment and PCE deflator, lagging indicators that the Fed is using in its monetary policy, just obsessive, compulsive. I know we're near the end of that being important.
Bitcoin has many of the characteristics of gold. We know what the cost of mining it is, and just bits in there. So, gold is very hard to mine. The quantity is relatively fixed back in the 18th, 17th, 19th century. So we had a quantity fixed there, and yet we were still able to have a price rule, to have price stability that whole period. So the conceptual framework here is, it doesn't seem to me to be any different than the gold standard back in the olden days, because Bitcoin is there. The other thing is that the fixed quantities, how did we do it back then? I mean, obviously the Bank of England held some sort of store of gold and stabilized the value of the pound, the dollar. We can do that back then. Some of the other stuff that you're talking about, the key here is being able to do futures contracts in a numeraire. That is the key. And how can we do that to where the borrower and the lender both understand what the value of the Bitcoin is going to be today, tomorrow, 5 years from now, 10 years from now, 20 years from now, 30 years from now, that we had with gold? How does that authority come into place? And it does not have to be government. It really doesn't. But how does that authority come into place so that Bitcoin can not only supplant the dollar, which I would love to see, but it has to supplant the dollar with a much more valuable numeraire. I mean, valuable not in the sense of how much it costs, but valuable in the sense that it serves the purpose of money very well. Store of value, medium of exchange, and stability of the numeraire. That's the key.
Cathie Wood draws parallels to historical monetary systems and suggests that crypto, particularly Bitcoin, shares similarities with gold in terms of scarcity and mining costs. She advocates for a return to the principles that historically worked, where stable prices were maintained through controlled quantities of money. Wood contemplates the need for an entity, much like how private banks once managed the supply of money during earlier monetary systems. Both Wood and Laffer agree on the significance of achieving stability in the contracts tied to crypto assets. This stability would be crucial in the evolution of Bitcoin as a store of value, medium of exchange, and a means to supplant traditional fiat currencies like the dollar. The challenge lies in determining the authority responsible for ensuring this stability without relying solely on governments. As a medium of exchange, however, the prospect of forking Bitcoin raises concerns, as the core developers might be reluctant to modify its fundamental mathematical metering, particularly concerning the capped supply of 21 million units. This poses challenges as demand for Bitcoin may increase beyond the fixed supply, potentially destabilizing the ecosystem. What do you think about the latest interview with Cathie Wood? And do you see her price prediction for Bitcoin on track to hit $1 million? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.